Welcome to our comprehensive guide on cost accounting. Today, we'll delve into its meaning and definition, the need for it, its advantages and limitations, and how it compares to financial accounting. We'll also cover cost concepts, cost objects, elements and classification of costs, methods and techniques of costing, cost centers and units, and finally, how to install a good cost accounting system. Let's get started. Meaning and definition of cost accounting. Cost accounting is a process of recording, classifying, analyzing, summarizing, and allocating costs associated with the process, and then developing various courses of action to control the costs. Its primary aim is to provide detailed cost information to management to aid in budgeting, controlling costs, and making decisions. Need for cost accounting. 1. Cost control. Helps in controlling the costs by setting standards and comparing actual costs with the standard. 2. Decision making. Provides relevant cost information for making various managerial decisions like pricing, budgeting, and financial planning. 3. Profitability analysis. Assists in determining the profitability of different products, services, and activities. 4. Inventory valuation. Facilitates accurate valuation of inventory, which is crucial for preparing financial statements. 5. Cost reduction. Identifies areas where cost reduction can be implemented. 6. Performance measurement. Measures the efficiency of production processes and helps in identifying areas for improvement. Advantages of cost accounting. 1. Cost control and reduction. Identifies wasteful activities and provides ways to reduce costs. 2. Enhanced decision making. Provides detailed cost information for better managerial decision making. 3. Profit maximization. Helps in setting profitable pricing strategies. 4. Budgeting. Aids in preparing detailed budgets and financial plans. 5. Improved efficiency. Identifies inefficient operations and areas needing improvement. 6. Financial management. Assists in managing working capital and cash flow efficiently. Limitations of cost accounting. 1. Complexity. Involves detailed and complex procedures which can be difficult to manage. 2. Cost. Implementation and maintenance of a cost accounting system can be expensive. 3. Estimates and assumptions. Relies on estimates and assumptions which can sometimes be inaccurate. 4. Limited scope. Does not consider external factors and is mainly focused on internal costs. 5. Changing methods. Cost accounting methods and standards can change, requiring constant updates and adaptations. Cost accounting versus financial accounting purpose. Cost accounting, aimed at internal management for controlling costs and decision making. Financial accounting, aimed at external stakeholders, investors, regulators, for providing a financial overview of the company. Reports. Cost accounting, detailed reports on costs, production efficiency, etc. Financial accounting, general financial statements like income statement, balance sheet, etc. Regulations. Cost accounting, no mandatory regulations, guided by internal policies. Financial accounting, governed by accounting standards, GAAP, IFRS. Time period. Cost accounting, can be done periodically or as needed. Financial accounting, usually done at regular intervals, monthly, quarterly, annually. Cost concepts. Fixed cost. Costs that do not change with the level of production. Variable cost. Costs that vary directly with the level of production. Direct cost. Costs that can be directly attributed to a specific cost object, e.g., raw materials. Indirect cost. Costs that cannot be directly attributed to a specific cost object, e.g., overheads. Cost objects. Any item for which costs are measured and assigned, such as a product, service, project, customer, etc. Elements of cost and classification of costs. Elements of cost. Direct materials. Raw materials directly used in production. Direct labor. Wages paid to workers directly involved in production. Overheads. Indirect costs, including both fixed and variable overheads. Classification of costs, by nature, direct and indirect costs. By behavior, fixed, variable, and semi-variable costs. By function, production, administration, selling, and distribution costs. By control, controllable and uncontrollable costs. Methods of costing. 1. Job costing. Costs are assigned to specific jobs or batches. 2. Process costing. Costs are averaged over continuous processes. 3. Activity-based costing. Costs are assigned based on activities and cost drivers. 4. Standard costing. Comparing standard costs with actual costs to find variances. Cost center and cost unit. Cost center, a part of the organization to which costs can be charged, such as a department, process, or machine. Cost unit, a unit of product, service, or time in relation to which costs are ascertained. Installation of a good cost accounting system. 1. Define objectives. Clearly outline the goals of the cost accounting system. 2. Select costing methods and techniques. Choose appropriate methods and techniques based on the nature of the business. 3. Establish cost centers and cost units. Identify cost centers and units for accurate cost allocation. 4. Implement appropriate software. Use suitable cost accounting software for data recording and analysis. 5. Train personnel. Ensure staff is well trained in cost accounting procedures and software. 6. Regular review and updating. Continuously review and update the system to ensure its relevance and effectiveness. This framework provides a comprehensive understanding of cost accounting, covering its key aspects and how it can be effectively implemented and utilized in an organization. That's a wrap on our guide to cost accounting. We hope this has given you a clear understanding of its importance, methods, and how to effectively implement the cost accounting system. Thanks for watching, and don't forget to subscribe for more insightful videos.